Okay, everyone, let's just test sound here. Perfect. All right, and there we go. So let's just get right into this. Welcome, everyone, to the new time for this stream that I do weekly. Generally speaking, it was on Saturday, trying for a few weeks, moved to Friday, gauge viewership, reaction from you guys, and also whether or not basically trying to free up my weekend, right? For lack of a better reason. So, as always, what we're going to do here is we're essentially going to go through the the short videos that I make throughout the week. I make generally 5 of those a week. So I go through and show you guys how I trade them, the theory I had behind them. If I traded them, there's quite often times that I don't take a look at any of them. Sometimes I'm very active with them. So then from there, I'll take a look at my thoughts on the crypto and the equity markets as a CMT, so a chartered market technician. We'll scan through the markets for things that I may be interested in going into next week. And then from there, we'll ask if there's any questions along the way. I'll answer those, but then we'll shut it down. I'll make one of those short videos based off whatever we find today. So the main reason I do this via stream instead of just doing it kind of personally is just so that you guys can ask questions. So feel free as things go on to ask questions about, whatever it is that you want to know about with myself and trading and all of this. And I guess let's just get right into it. It's an interesting day for it. So again, for the people that are watching this that are not part of the pro product on statsedgetrading.com, links in the description below, we had a little meeting in the afternoon just to talk about all of the craziness that was going on today, in which there was this insane volatility right at the close, and to not worry about it, because what's happening, if you guys don't know and you're seeing all your stocks bouncing all over the place, is that we're looking basically the Russell rebalance. So things got moved from the Russell 1000 into the 2000s into the 3000s, and back and forth into all these different Russell indexes. So based on whether or not they were up promoted or downgraded or whatever, you get these large market on close orders, which is basically just market makers trying to settle the amount of shares that they have to buy or sell at the closing price of certain securities. So you get all this whippiness, right? You get this craziness going on, and you basically just stay out of it. So what I told the people in the service that I was doing personally was basically just saying, hey, this stuff is getting pretty wild, that all of this is going to happen and it's going to be annoying. So what I do is I just pull my orders, wait for all the chop and slop to go all over the place, and then I just add the orders back in after that. So again, you can see here the big bottoming tail on the SPY and all that. It's all nothing. It's all them just saying, hey, I've got a million shares of this stock to buy and a million shares of this stock to sell. And then what will happen is prop firms and hedge funds and big institutions will go and say, okay, well, I'll take the other side of this one. I'll take the other side of that one. Maybe they get a little bit too into it and they're like, okay, I'll take the other side of that one. But then that ends up being too much. Then the market maker want it, and then you get problems there. So it's really, without spending the entire hour on this, it's a mess, right? It's just an overall messy market, and so I just kind of stay out of it. I know that Monday it will all be over and things will just go from there. So that's going to be kind of the way to take a look at that. So if let's just go over and change channels here, and we'll start looking at this one. Maybe not. No. So this is where I just monitor things throughout the day. Oh, ICPT closed strong. That was great. FTAC had a bounce, which is good. Fastly, that's still rocketing, but they're going to call away my shares on that one with my covered call for sure. Okay, so if I did this right, that'll be great. Let's actually do, let's actually do this, and I'm going to put this here, and I'm going to do this here, because there is one scan that I want to look at that I have to be slightly sneaky about, because it's just not ready for prime time yet. So we'll put me there, and we'll do one of them. And if you guys are in Barry's room at all, you'll know that there is stuff that we're working on. Do that, and then perfect. Hey Sam, how's it going? So yeah, this is the new time frame. I'm gonna try it out. I'm gonna see your guys' feedback, how many people watch, if you guys like it, all that kind of stuff. And then I'm actually gonna make another chart here, and I'm gonna make this a weekly chart. So I'm going to go, been focusing a little bit more on the weekly charts there as well. Oh, no problem. It was very selfish reason for the time change, and I just want to spend more time on the weekend drinking beer in my hammock and less time staring at computer screens. So it's one of those, do I just push it, and do work a little bit later on a Friday, and then, then on the weekend not have to do as much, or before I was saying, oh, well, I'll leave early on Friday and then kind of go from there. So let's just go through the list first. So if somebody's just stumbling upon this, I'll bring this in here. But I do these videos once a day. I've been putting them on YouTube. I actually have them on TikTok as well, but I really don't talk much about that because I'm mildly embarrassed having a TikTok. But yeah, so I do these short videos where I just talk about these are the trades that I'm watching. Just ignore that. That's the members webinar we had for the Stats Edge Pro trading product. So then what I like to do is once a week, we do this live stream where I go through and I say, okay, here's the ones that I traded, and then here's the ones that I didn't, and this is how I traded, so that people that are just interested in just following me and want to understand why I'm looking at these and that kind of thing. It's obviously not financial advice. I'm not a financial advisor, just some guy on the internet, all that stuff. You can see what I did with them, right? So we'll do that first, and then we'll go do the market analysis for the people that kind of show up for that. So yesterday was AEVA. Essentially nothing happened here. I am still interested in that. The theory behind this is we were kind of looking at this wedge pattern that was happening here. So this is a new issue. It sold off right from its IPO. I think I heard a stat somewhere that when stocks IPO, there's like an 85% chance they undercut that IPO price. So this was one of those. And now it's been kind of strong and then just basing around here. Right through there, and then kind of seeing if that's popping up there as well. So nothing on that one. OTRK. I have not taken this one yet, but I'm still interested in this one as well. Again, basically just looking to see it pop through here, then to see if we can get into the gap there. And the main reason I was looking at this one was the 36% short float. So I still like the look of that one, but I didn't take that one yet. Beyond Meat, I can tell you right now, I remember because I was looking at that today, and it got interesting, but again, still nothing there. I swear, in the Pro product, there was a lot of trades, and they were good that I took. But this one I still like. Again, just looking at the bull flag that's going on here, and then the 23% short float, right? So you just got this kind of up, and then it's been chopping sideways, waiting for that second leg. Didn't get that this week, but if we get over 150 and Beyond Meat, and I'm actually going to start, hold on. I keep forgetting to do this, but I always have my iPad just sitting like right under my keyboard here, and like just stuff like that I just want to make a note of. So over 150. Okay. Just to make sure I continue to keep it on the list. And then there was PROG. PROG. This one I missed, and I wish I'd taken it now that I look back. I think it was, I was looking at it right here after this engulfing day, and I just straight missed it. So that was a good one. So maybe someone else got that one. CYRX. I got that one, and then I got stopped out today. So I was looking for it over that little doji right there. It broke that, so I took it right there. I got out half of it that on the same day, just because it was such a rocket. Right? I think it was up from 60 to 66. So yeah, it was like 10% in a day. And I'm like, I'm not, I have to take some of that. And then I put a stop under this red candle and said, okay, if we can bounce from here, I'm happy. If not, get me out. And I got out the rest right there. So that was a great little trade. And I think that's it. Oh, I also want to show Fubo, which I talked about last week, but we actually got in this week. So Fubo, I was watching over $30 on this kind of same look as that AEVA the other day, or the other one that I talked about. And I took that right here as that broke in through there, looking at the 21% short float. Took out a chunk today, and now I'll probably just use the low of this day as a stop for the rest. So good trade on that one as well. So that is the trading from those. So didn't take many from that, but the ones I took were good. And now I'm actually mad at myself at missing that PROG. So as is my rules, I have to go back through now and essentially figure out why I missed that, because that's kind of an important thing to track, because that was a, PROG. Let's just go and review that, right? So I wanted it because it had this nice pullback and then this engulfing candle. So the next day it put in a doji. So I had all of the time in the world to get in that. And then the day after that, it was still just a small body candle. So I had 2 days in which to get into that, but somehow it didn't make an alert, or I didn't set an alert, or I didn't add it to a list or something. So it's good to review your trading in that way and say, hey, I missed this, and if I didn't, it would have been a great trade. So I need to figure out how to make sure that I am to make sure that I am figuring out why I missed it, so that next time I can do a better job of setting alerts or doing whatever happens to be going on there. So let's just get right into the market analysis. So from here, I like to go from there. Again, if there's questions throughout, please ask. Again, I don't keep up the numbers of the people watching the stream or anything, so I could be alone. But, ask, right? Certainly ask away, and and we'll chat as we go. So then the next step is market analysis, and then right after that is scanning and trying to figure out what's for this week. So let's go into the crypto first. I had mentioned, and some of this stuff I need to make sure, I don't know, I just talk about stocks so much, I don't know what I mentioned here and not. So just for future reference, if I said, I mentioned, I actually may not have here. But yeah, draw those lines. So basically, forever, it seems like, we've been looking at this giant base that's been going on here in Bitcoin. I took two shorts in through here. One was a small loser, I think right here. And then this one was another one where I took a short under this small body kind of spinning top that happened right at the 200 EMA. Just thinking, right, we're obviously in a downtrend. We've bounced the 200 EMA. We put in a small candle. If we break the low of that candle, maybe we'll continue down. That's exactly what we did. One thing that I think is interesting to note is this fake out right here. So this support has been held for a long time, and then when we broke it, we just broke it and then bounced right up in its face. So is that a it's one of those things. What was the movie? The Princess Bride, when he's playing like the poison game with the guy, right? Is this did you I put the poison in the cup, but then you knew that I would put the in the cup, and then so I put it in my cup, but then you knew that I would put it in my cups, and I put it. It's that kind of thing, but with bear flags and or bear traps and bull traps, right? So as this thing is selling, everyone's like, "Yep, that's it. Bitcoin's going to 20,000. This is the end of the world." And then when it bounced and closed back into this range, the everyone's like, "Yep, that was the bull trap. Therefore, that's the low, and we got to get going, and everything's going to be sunshine kittens from here." We bounced into the 20 period moving average, and then we have this big down day today that actually engulfed the last 2 days. So did the bull trap or did the bear trap lead to a bull trap that's now going to lead to a down move? I don't know. The simplest way to deal with this is to draw a line here and then a line here. And I am short from the top of that line. I'm just not going to participate. I'm still short the entire position. And basically, I'm just not going to do anything until we break and clear that line for a couple days or break and clear that line for a couple days. It's sometimes just that easy, right? Not always, but it's sometimes like you don't want to overthink yourself. You just want to. I just see. What's going on here? BRC. The R key is not working for me on that. That's incredibly strange. So that's that kind of range being put in there. So that's basically the story of crypto entirely. I like to look at relative strength and weakness a lot in crypto now that they're not perfectly correlated. Ether actually looks a little bit worse than crypto or than Bitcoin here. Sorry, I meant to grab a screenshot as we go, because one of the things that I do at StatsEdge trading in the pro product, well, basically what the pro product is these thoughts that I'm telling you now, basically annotated on charts given to people daily. And then from there, they can make their own trading plan around them. I have, automated watch lists and all that kind of thing, but not a signal service. I am just some dude on the internet. So same Ether actually broke this support area right here and then couldn't get back into it. So as Bitcoin had that giant bear trap, Ether couldn't even muster that, which is unnerving. ADA USD, actually it's holding a little bit stronger. So that engulfing candle we're having on Bitcoin is not yet on ADA. And then last I like to look at is Doge, and that's because, come on, there we go. Doge is actually relatively strong compared to the rest of them. It's sold off, but it's actually holding in the high end of that range, which is just hilarious considering it's Dogecoin, right? Okay, so that's crypto. Basically, the entire crypto industry looks weak to me right now. I would not be long any crypto myself right now. I am short Bitcoin. I may add shorts in other positions, depending. I need to go check how much of my account buying power and all that's free. It doesn't mean it's going to be like that forever. At some point, I'll switch my bias, but to do that, basically what would have me switch my bias in Bitcoin is just a retake of 40,000 and a hold. Right? It means I may miss from wherever to 40,000, but I am totally fine with that. Okay. Now, another website I go to next that I really like is Koifin. I have no affiliation with Koifin. Oh, they have a premium plan now. Hold on. I'm just going to make a note. Koifin. Check. Plan. because I may buy that. I like them. I like the service that much, that I may actually pick that up. So basically, what Koyfin is, if you don't know, again, not affiliated, unless somebody here knows someone from Koyfin and they want to say, hey, you should really check out this Michael Noss guy. He seems super smart and all that kind of stuff. That's that'd be great, but if not, I'll just buy them. So essentially, what I'm looking at and this is, I figure, a cool way that I can do this too, that I may start doing things like this, where I can annotate this with my little iPad that basically lives by my side. So what this is basically doing is looking at all of the different indices that make up the SPY, right? And comparing them all on a relative basis, right? So for example, XLU has been the weakest. It's the only industry that had a negative return this week of the different industries. So I always like to look at what's weakest to avoid those, and then I like to look at what's strongest, and that's where I want to kind of focus on a lot of my trading going forward. Right? So XLE and XLF are very strong. So that's financials, and energy is doing well as well. So this is kind of a mixed market, because I've been talking a lot about the growth versus value. Away we go. And then it doesn't seem like that distinction is here as much anymore, which just means we need to find the next theme of the market as it's going. And if we take a look at XLRE, for example, that's real estate, so that's low. And then we have XLK, which is tech, which is higher than real estate. But the two highest are also kind of value plays, right? So value down here is hurting, value up here is doing good, right? Growth is kind of in the middle. So what does that mean for? Well, in the words of a JC, the market's a mess. Some industries are going up, some industries are going down. It just means that you kind of want to more or less just be very, very nimble when those things are occurring. So now that I have that information, I'm actually going to move that over to my other monitor because I want to keep it up, because then it's time to take a look at some of these markets. So first, take a look at the SPY coming into Monday. That was Monday, right? Monday, yeah. Coming into Monday, things didn't look the best. We had this gap down. Looked a little bit messy. That maybe we could get some kind of back and filling and maybe a breakdown, because we were holding under this area right there. So this may have been a fake out or a bull trap that I was thinking. Turns out not the case. We just rallied up from the close there and actually made, I believe, a new closing high. Yeah, it would be. Look at the weekly candle down here. And again, one of the reasons that I'm liking the weekly chart so much is, and actually, let's just do that. I think I'll like it better like that. Oh yeah, that's much better. The reason I like the weekly chart so much is because it gives you perspective, right? It seemed like the end of the world right here. I gotta check, make sure you guys can see that well. Oh yeah, that worked out perfect. Yeah, so the reason I like to do this is to zoom out. You know, when we were here on the daily, everybody, you know, you go on FinTwit and everything, everyone's losing their mind like it's the end of the world. And then you look in the weekly and you go, okay, that was a bad week. If we had another bad week to retest these lows, right, we're still in the context of this insanely bullish overall uptrend. And we made new highs, new weekly closing highs, and new daily closing highs. So that's not bearish. So I want to look at the top gainers these weeks, and I want to look at the bottom gainer this week as well. So it was XLE was the top. And this is interesting because even though it was the top gainer this week, it is not the top gainer overall, right? It's not at all-time highs the same way everything else is. So XLE still has some room to go. Let's look at the post-pandemic. Yeah, and it's still way below its post-pandemic crash. So, although strong intermediate, it's not as strong as the rest of them overall. And then XLF at a new high. XLF, I think, was the worst performer last week and then one of the best performers this week. So basically, that just means more volatile. So I'm just going to put XLE, XLF, very vol, right? Because it's just, they're crazy movers. They're just moving erratically. So it's not like they're better or worse than anything else. They're just more volatile and way more volatile than normal. Generally, when you think of finance or financial industry, you don't think of insanely volatile stocks. You think of more chill stocks. And that's kind of what we're seeing here. So last but not least, let's take a look at the Qs, and then we'll get into some scanning. So the Qs, although stronger relatively than the overall market, they're having some issue here in which there's a big topping tail yesterday and then a bit of a pullback today. So I am actually going to look at the growth versus value trade. And an easy way to do that is look at IWN. So IWN is the Russell 2000 values index. So basically they let in stocks that are low PE, concrete names that things are going to kind of happen throughout time. And you can see this is low, kind of this 170 level has been huge. And it tried to retake that today but closed red. And then we go IWO, which is growth. And you can see, again, over the last few days, growth has definitely outperformed value. I have another way to look at this, but I think I can do it with Koyfin too. IWO. I'm thinking I'm going to use this more and more. So there's IWO. So then how do I add ticker? No, I can't do a... Anyway, I'll figure that out off stream. Way to do a comparison chart, which is something I hope we're going to have in Trade Ideas very soon as well, is just comparison chart to show us the difference between basically one security divided by the other. So I'm going to put, again, I'm making notes here because what Stats Edge Trading, the Pro is the Pro product is just my thoughts here. So as I go through this scanning, basically I do this work for about an hour or so every night, and then I prepare my summary and my thoughts of it, and then people get to read that, and that's more or less the product. So I'm just writing down little notes so that I can prepare my thoughts in something that I'm interested in there as well. Another thing that I want to do before we get into scanning that I keep forgetting to do on stream and then I always do after stream is just go to the news. And for that, I use a website that I think I've gone to all of the time forever. So let's go Monday, apply. Forexfactory.com. I don't know what they do other than the fact that they have this cool little box right here. Wrong button. Yeah, they have this cool little box right here that has basically news that is coming up and then whether or not they think that news will be market moving. So this impact column right here, if it's yellow, it means it's kind of okay news. Red is going to be what they think is market moving news. And then because they're a Forex, they have more than US. So here's throughout the market. So basically, I'm just seeing that 30 minutes after the market moves, or 30 minutes after the market opens, whoever Williams speaks is going to move the market. But those guys have been chatting all week, and other than Pump and Powell, there's been no effect on the market. So whatever. All right, so we're crushing along. Again, questions, anything you want to chat about at the very end. What I'll do, and this is something I'm going to add, is from the time that I'm done my scanning and I have a relatively good list of things that I want to put in prices and everything for the pro members and the thing I want to make the video about, then I'm going to go and I'll do where I'll analyze your tickers for you if you want. I know that's something that people like. So, if I finish 10 minutes early, we'll do 10 minutes of what do you think of X? Sometimes it leads to some cool conversation too. So don't post that yet, but get ready to post it. And what I want to see is the symbol and then your time frame, right? Do you hold stocks for a day, a week, a month, a year, 10 years, 20 years? So basically what I do is I look at the notes that I've written down here, which probably are impossible for people to read, but I go through that and I keep this in mind as I'm going through and thinking about all of these different things, right? So I'm thinking that XLE and XLF is very strong and that XLU was very weak, right? So I can kind of keep that in mind and I can say, hey, I get that. So this one, for example, AMPY, I'll take a look at it, and then I look at the chart and I say, okay, that looks interesting. I don't like this for reasons we'll talk about in a second. But then I can come look right here on Trade Ideas, and it says, okay, crude oil and natural gas. So I know this is at least XLE adjacent, which is a strong index, and you want to be where the strength is, right? Also, the Qs, right? Even though not strong in the last few days, they were strong in the week overall. Now, this is just not volatile enough for me, and that's just because $5 is up here and we're at 425. So I'd have to commit a lot of capital to this because it would have such a tight risk. I'd basically be risking like 10 cents to make 20 cents. So then the amount of just kind of money I need to put into it exposes me to kind of risk that I may not like. Building inspection services. It's interesting. So yeah, this is a great thing that I like to see every time. So when it says Acquisition Corporation Business Association Services, then it's a SPAC, right? That's basically what that means. So I'm not interested. You have to go through and you have to read what's a SPAC turning into, and not interested. This one is interesting to me with 19% short float on ARTC. So again, I'll just make notes. ARTC. The reason I like this is the 20% short float that's going on here. 21 million shares and 20% of that short. So of the 21 million shares, 5 of them are short. So that's really interesting to me. It's got this nice potential bullish pullback going on here. So it gets you a nice clear entry area, kind of above that doji, and then a nice clear stop. If you want to do a worst case stop down here, I'd probably even go tighter than that. But so that's one that I'm interested in. We'll just keep going. So, I like to add no more than 5 or 6 stocks to the list. So what I generally do is I make a big list, like a big kind of include everything list. And then from there, I will narrow that into something a little bit smaller. 5 times normal volume on this one today. Bonza Creek Energy. Strong, holding strong. Crude oil, maybe. Let's try that. Let's take a look. And then $50 seems like an interesting level. 48. So a little bit more volatility in that oil name. So this scan, again, this is the one that I'm still playing with and is something that may be new coming to Trade Ideas. It's essentially looking for strong stocks that are pulling back or resting, and strong being strong over the last week or two, right? So like this obviously isn't strong from back here, but ever since that low, the trend has been changing, and that's what I look for. Is I am a trend trader in the sense that everything I look at has to have something to do with a change in trend. So again, this one's getting hammered, but if you look at it from the low, we have a low and then a high and then a potentially higher low. So if we break here, we have a potentially higher high. So this may be, even though, right, it's a trend trade, this may be a change in trend type of a trade. So is that 300,000 shares today is a little bit light, to be honest. So, I mean, you're risking about $1 on an $8, so maybe. And that's fabricated metal. So that's the other thing I do when I look through and I build a list, is I don't want to build everything in the list under the same industry, right? Because then I'm kind of just pigeonholing myself in. DMRK looks nice. I like the 22% short float, so I'm just stopping for a second to talk about this, but it's I'm already in, right? So I can't make it the video, and I can't, I won't recommend, or not, I never recommend stocks because I'm just some dude on the internet, but I won't even say, hey, maybe you should take a look at this level if it meets your trading plan, because I feel the ethics behind that are questionable, right? And, if you're already in, what's the point in telling other people to get in? Every now and then I will say, I am in this, but I also like, and I did that this week on ICPT. Right, I got in ICPT right here, but then when it chopped sideways for these 3 days, I said, I think I may like it if it breaks out there. And that looked like it turned into a good one. Took a solid chunk off that today. FTech's interesting. Do I still have a tiny amount of FTech? I don't think so. I would have to go check. Basically, FTech I bought in through here. When it was breaking out there, turned out to be a great trade. I sold most around 3, just because it's one of those, I expected this thing to kind of, grind higher slowly, and it just shot up. So I want to take a bit of money when it does that. And it's been pulling back. I don't think I bought more. I think I actually stopped out of the rest around here, but I have to check. So I'm going to make that on the list, but I'll check my holdings first just to make sure I don't already have it. I like this one. This one's in renewable. No, I thought it was renewable energy, industrial, commercial, and blower fan manufacturing. So it's not at all what I thought it was. So we'd want to see that over 250. And we'd be wrong. 225. So that's a decent risk for that. So a decent little potential return there. Gary. What does Gary do? So what I'm doing now is I'm writing down pretty much all of these, but then when the stream is over, I'll go through and take a deeper dive into them, and just make sure that there's nothing I missed, there's nothing crazy going on. I don't spend too much time noticing the news, but I do want to see, make sure that there's, right, not these guys are getting sued for this thing and that lawsuit's going to come out tomorrow, or they applied for this drug and that's going to come out tomorrow. Hess is interesting. It's a little bit too thick. iMac, outpatient stuff. And I know I'm hammering through this, but I really just have this is part of the, you do it every day, and eventually you'll like, I know what I like and I know what I don't like. So I know what I'm looking for, and I know what I'm not interested in. And I can make that snap decision in a second. And then from there, I then research to see if my snap decision was something that made sense, right? So again, there's one of those things that everyone's like, you just bang through these charts so quick. How do you know? It's like, well, I don't. I'm going to miss a lot of them. But, I want to make sure that things look like how I want them to look first, which NVST. Let's take a look at NVST. NVST, it's a different sector than I was looking before. You kind of got a pullback and a pullback here, right? So you have this strong push up that's going on here, and then this slow, oh no, it's already disqualified itself. I was about to say you have this slow pullback, but then you have another strong push up and another slow pullback. So it's like a bull flag and a bull flag. But then I noticed that's 45 and that's 40. So it's like 10% from here to there. And that's just not, again, it's about capital efficiency, I guess is the best way to put it. I want to make sure that the stocks that I am trading generally move. And it means that sometimes, they're going to move against me and they're going to hit me harder than I would like because they're volatile. But it means when they move for me, they are going to make a bunch on the same click. So what I try to make sure that I do is I'm involved in the more volatile instruments. So I have to commit less capital, right? If I'm, say I want to make, I'm like, hey, okay, I'm going to go in this, I want to make $1,000 per trade, right? I'm risking $500 and I want to make $1,000. I got 2-to-1 risk reward ratio. It makes more sense to be able to apply lesser capital to that and still get the same potential return over the long run. I hope that makes sense. And again, it just means that I can be in more trades at once from different sectors based off different analysis that I do, because I'm keeping my capital efficient, right? Putting it in something like General Electric would be way less capital efficient in the long run, and be kind of annoying that I just have to wait a little bit longer. But that's for me and my risk tolerance, and based on how long I get to look at the market. And because a lot of what I'm paid to do outside of my own personal trading is look at charts, right? So I'm allowed to look at this stuff all day. If you guys are trading more detached, well, you may say, well, I want crazier stocks, right? I want more insane instruments just because. Yalla looks interesting. I just like, if you look here on the weekly, we had this big strong push up and then a big pull back, and we've kind of pulled back into that area of support that existed before. So right here and right here, and it's been chopping sideways for 3 weeks. And then I look at this on the daily, and you could look at this and say, right, I could see an argument for a cup and then maybe a handle, but again, the same thing that I look at, where this is downtrend, up, right? Potential higher low, and then through here, now we have a higher low and a higher high. So a potential change in trend. So I'm going to add YALA to that. And we're going to take a look at $20, and then we're going to take a look at 1775 just to see. And that is the end. So that's good. So that's 15 minutes. Again, you guys can ask if you want me to look at stocks. Please include a time frame. I think it's going to be ARTC is what I'm going to make. ATRC. Nope. What was that first? Man, how did I mess that up? No, that was right. ARCT. Telling you. That one. That's what I'm going to make the short video about this week. So again, just to summarize everything, and I see one question there, and we'll take a look. So to summarize, crypto looks very bearish to me. Equities look bullish, but we just hit new highs, and often when we hit new highs, we can get a lot of chop. So I'm going to be cognizant of that. Indices, financials, and energy did great this week. XLU or utilities was the only one that lost money this week. Growth versus value still seems to be value is coming back in favor, which again is great for us as kind of more swing traders, right? We want things to happen quicker, and value stocks happen quicker, or growth stocks happen quicker than value stocks. So that's just good for us. But we will take what the market gives us. So X1. That's interesting. Equipment manufacturing. No earnings date. Decent float. 10% short. It's got that kind of look that I like, right? So you can see this thing is obviously in a downtrend in through here. So, I don't want to participate at all through this. I don't even want to try. But when we do something like this, it's like, okay, well, now this pattern of lower lows and lower highs, maybe, we don't have confirmation yet, but maybe reversing, where we have a high here, then a low here. So if we break that high, now it's going to potentially look like this, where maybe we have a high here and a low there, and that's a little bit of a reversal pattern. So I actually like the look of that one so much that I'm going to steal that from you. And I'm going to put X1 on the list. And I'm going to, 24, 21. That's good. That's interesting. Hey, Jim, I can show you those stats. Yeah, I'm going to do a blog post about that on the weekend, but that's a good idea. Let me actually do CX here, and then I'll talk a little bit about that. I don't like this at all. This candle is what I'll say about CX. Now, right, it's, it makes sense because it's insanely overextended from here to here. Like if you look at that on a percentage basis, you're talking 750 to 20% ish. I hate doing math live in front of people, but it makes sense that it struggled at $9. I don't like that it closed back under this swing. It looks like there's a lot of resistance up there, and we'll push down there. So I don't like the look of that one personally. Again, it all makes sense. So what may happen is people who were long here made a bunch of money. So they may be taking profits up here at this prior resistance, and maybe it just pulls back and then goes. But I wouldn't be getting involved in this one here. OTRK, Vlad, we actually mentioned that I had this in one of the videos I made last week. I didn't end up trading it, but I am interested in it. This candle's obviously not good to open at the high and close at the low. But basically, I want to see a break and a hold above this area. So I think what I did Just trying to look. Yeah, the high there. So I think what I did is I put on an order after I mentioned it in the video at 36, and I wanted to see it close or get above 36, and it didn't, and then it pulled back. So back above 36, I think it's interesting. I like the short float. The short float's great. It's just this candle's a little bit disconcerting, but I'm not in it. So I want to see it prove itself and get to 36. So let's actually chat a quick second about what Jim was chatting about there. Let's put that down. Do I? Oh, 1 second. I just got to get that file. So this was kind of a cool conversation that I'm going to make a blog post about this weekend, in which documents. Basically, we were talking about chasing and how you shouldn't, right? It's basically the long and short of it. But then they were talking about, just like I always do, everything I do with trading is based off of statistics, right? So I am a CMT, which is Chartered Market Technician, and that's the study of charts, right? More than anything else, right? That's the fancy, chart patterns, chart techniques, risk management, all of that. Oh, it didn't update. No, I gotta do that a little later. Maybe I think I can pull over. That's a good idea. I'll just grab our Discord conversation. So I run everything based off chart analysis, right? I take a look at charts, and that's how I make my decisions on everything else. But those always start with statistics, right? Because I want to combine statistical analysis with technical analysis, so I know not only does this chart look pretty, but this chart looks pretty, and I've studied this pattern, and it has XYZ criteria with it that then says, right? So it's the combination of man and machine. If you've ever sat through a Trade Ideas webinar, you've heard that, and that's really where I think the power of trading is you take fundamental analysis. If that's your thing, if you really like to look at the story and you say, hey, this is a new company and I like the oh, sorry, it's got a touch sensitive mute button. Thank you for letting me know you lost audio. And sometimes I just tap it and the audio goes. So basically, what I was saying was that the way I look at the market is that you take some sort of analysis that gives you your directional bias, and then you use technical analysis to make sure that you're in the direction of the trend, right? For example, you could say, hey, I love electronic vehicles. I think they're going to take over the world. I think we're all going to move to solar eventually, and self-driving autonomous electric vehicles are going to be the future. We're all just going to sit inside of our Tesla, whatever, and then go from there. That's great, but if EVs are tanking, what's the point, right? Why would you be involved in that then? So you take whatever your analysis or your bias is, and on top of that, you put your technical analysis, where you say, okay, I love EVs, but they're in a downtrend right now. I'm going to wait for that trend to reverse, and that's when I'll get involved, right? That's how you'd use a technical analysis for like an investing type of thing. So what I do what I do personally, and that's why I called it Stats Edge trading, and that's what we look to do there, is I apply statistics first, and I say, okay, this setup or this scan or this criteria or this candlestick pattern has even if it's a slight statistical edge. And then I'll take that and I'll say, okay, now that I have a slight statistical edge, now let me apply technical analysis to really try to time the entries and the exits and all of that. And that's how I look at the market. So anyway, today a conversation came up in our little Discord chat at the Pro Product that, hey, I think it was just, hey, look at this stock. And I looked at it and I said, it's up a little bit too much. And there was, I guess, not really a debate, but someone say, oh, well, it looks good if it breaks this. And I just want to say, okay, what would happen? And this is the example I gave, and this is how I think of every trade, is what would happen if I took this trade 10,000 times? Because I don't care about the next trade. Caring about the next trade is for, hodlers and gamblers and people like that. What I care about personally is the next 10,000 trades, because I'm not trying to get rich overnight. I think that's a fool's game in trading. What I'm trying to do is to just put together a small percentage gain against a small percentage gain against a small percentage gain. At the end of the year, hopefully that turns into a good growth of my account. And so I said, okay, well, what would happen if we bought stocks? This particular stock was up 12%, I think. So we said 10%. What would happen if you bought stocks that were up 10%? And then what's the return the day after? And again, I just, used some tools that I have access to. And then I tested this out. And this is the result of that. So you would have lost from 2014 until now is when I tested it. The criteria was volume, let's just call it vol. I think it was greater than 200K on average. Price was over $5, I think $5. And then it was up 10% on the day. So this is what would happen. And essentially, just spoiler alert, this is negative $70,000, right? Which, or not, negative 70,000% gain. And you can see that you really never made money on buying stocks that were up that amount. I don't have the chart ready with me, but it was funny. Then I flipped it and I said, well, does it make sense to take stocks that are up 10% and sell them and then cover them the next day when they're lower? And the problem with that is that every now and then you had a AMC, or what was the one, ALF this week. You had something like that where just one or two of those trades was enough to kill you. So what this basically taught me was that I'm going to ignore any stock that's up or down 10% on the day. If it's moved that much, I'm going to consider it a missed trade. And if you find yourself chasing those type of stocks, this is a really cool, very basic. This is not good statistics, right? I did this in half an hour on my hammock kind of thing. But it's a good bit of statistic to show you that if you find yourself struggling as a trader, and if you find yourself chasing price action a lot of the time, then it's time to relook at things, right? It's time to go back and say, hey, maybe my strategy that's waiting for this pop to happen and then going in isn't the move. Maybe I should look for the stock to maybe pop 10%, and then you use it as a pullback, right? And say, hey, if this pulls back, then what's happened? So what I'm going to do this weekend for this blog post is I'm going to go out, I'm going to do what happens after day 1, and then day 5, and then day 20, and then, I don't know, maybe day 60. And then see, because if it's really this bad on day 1, but then I find out on day 20 it's better, then that might mean to build a strategy that says, okay, well, if a stock moves up 10%, then wait and participate in some sort of a pullback, right? And this is just kind of the synopsis of what's gonna happen with these things, right? So you take an idea like this, and this is basically how I look at trading when it comes to statistics, is I use a bit of the scientific method where I say, This is my hypothesis that buying stuff that's up a crap ton on the day is a bad idea. And I think it's a pretty logical hypothesis. And then on top of that, I'm going to prove, yep, that's right. But then that, and that's why, again, I love data, I love trading, I love doing this stuff, because this has then got me excited and said, okay, then what? And then I can start to ask different questions about what happens after a move like this, and then try to derive some sort of to see if there's any sort of statistical edge, stats edge, to building something that says, okay, we're going to look for a spike up, and then maybe we're going to look for a pullback over the next X amount of days, and then we're, because again, if it's negative after 1 day, but then it's positive after 20 days, then that means at some point between 1 day and 20 days there was a buying opportunity, right? So it may mean just take stocks that are up 10% on 1 day and hold them. But again, I don't know. It may also be both bad after 1 day and bad after 20 days, and just might not be anything to do. So for the question, there was no stop losses here. This was simply saying, stock's up 10% on the day. You buy it when it's 10% on the day. You wait until the next day. Where does it close? And again, it's not even like close. You were right, I think 35% of the time. So the win rate sucks, the risk reward sucks. Just don't chase stocks, right? So that's kind of the summary here, is just don't chase, right? If you look at your stock and you're like, oh, that's up 10% on the day, that looks good. Again, I'm not telling you what to do. It's a free country. But here's just what my really gross, dirty statistics say for that. So, all right, so that's going to be it for today. Again, let me know what you guys think of the new time zone and the new time to do this, but I like it a little better. It means I stay an hour later after work, but that's fine on 1 day a week. And then, I'll putter away on everything for Stats Edge and all of that. You guys I'll ping you in Discord when I have that done, but that'll be done tomorrow sometime for sure. And then, again, let me know what you guys think. If you're interested, come check out my website, which is, I should always plug this here. It's always in the description below every video. I have a free blog there, and I have a free training course to teach you the basics of trading. That's all on there free, so go check that out. And I will talk to you guys tomorrow, Monday. I'll talk to you guys Monday. Have a good weekend, all.